Hey there, Iggy the Investing Iguana here. The Investing Iguana is featured and ranked 8th in the 2023 Influential Tigers by Tiger Brokers, with a total of 410,000 reads. Today, we're diving into some juicy news about CapitaLand Ascott Trust. Brace yourselves, because this hospitality trust just hiked its dividends by a whopping 16%. In this video, I'll break down what this means for you as a potential investor. We'll explore how CLAS has been bouncing back from the pandemic, their savvy strategies for growth, and why this dividend boost might just be the cherry on top of a tasty investment sundae. So, grab a snack, sit back, and let's unravel this together. Let's start with a brief introduction. CLAS, a name that resonates powerfully in the hospitality industry, is the leading hospitality trust in the Asia-Pacific region. With an impressive portfolio of 8.7 billion Singapore dollars in assets, it's akin to a colossal titan in the realm of hospitality trusts. This vast wealth is not concentrated in one place, but is spread across a staggering 106 properties. These properties are not confined to a single city or country, they are scattered across 45 cities and 16 countries, painting a picture of a global empire of hotels and serviced residences. It's as if CLAS has its own version of a world map, each pin on it marking their hotels and residences. Now, let's move on to the part that makes investors' hearts flutter: dividends. CLAS has been performing exceptionally well in this area, especially in the past 3 years. Since the pandemic, they've been on a winning streak, increasing their dividends year after year. It's like a champion athlete breaking their own record 3 times in a row. The year 2023 was no exception. They raised their dividends by an additional 16%. Imagine ordering a pizza and getting extra toppings not just once, but 3 times in a row. That's the kind of delight CLAS has been bringing to its investors. But that's not all. CLAS isn't just resting on its laurels. They are dynamic and proactive in managing their portfolio. They have a strategy in place that involves selling off older properties that yield lower returns. It's like having a garage sale of sorts, but on a much larger scale. The proceeds from these sales are then invested in acquiring newer, more attractive properties that promise better returns. It's akin to trading in your old phone for the latest model. It's a smart move that not only keeps their portfolio fresh and updated, but also ensures a steady stream of income. In addition to this, CLAS is also investing in asset enhancement initiatives, also known as AEIs. These initiatives are like a spa treatment for their properties. They involve refurbishing and upgrading the properties to make them more appealing and competitive. It's like giving their properties a makeover to enhance their market value and attract more customers. The ultimate goal of these AEIs is to unlock the organic growth potential of their properties and drive up returns. It's a strategic move that ensures their properties remain relevant and continue to yield high returns in a competitive market. This dynamic approach to managing their portfolio is what sets CLAS apart and contributes to their success in the hospitality industry. It's not just about owning properties, it's about maximizing their potential and ensuring they continue to be profitable assets. That's the CLAS way of doing things. It's a strategy that has proven to be effective and has contributed to their impressive performance in the past few years. So, you might be wondering, what does all this information mean for you as an investor? Let's break it down. CLAS, with its impressive portfolio and strategic management, is currently offering a tempting 7.1% dividend yield at its current price. To put it in perspective, this yield is higher than that of CDL Hospitality Trust, which stands at 5.9%. It's like comparing 2 dishes and finding that one is more flavorful than the other. In this case, CLAS is the more appetizing option for investors looking for high returns. But there's more. The future looks promising for CLAS. With the global travel demand expected to keep soaring in 2024, CLAS is well positioned to benefit from this trend. It's like a surfer perfectly positioned to ride the wave. As more people travel, the demand for hotels and serviced residences is likely to increase. This could lead to higher occupancy rates for CLAS properties, which in turn could drive up their revenue and profits. And as we know, higher profits often translate into higher dividends for investors. So, investing in CLAS could be like boarding a high-speed train that's on track to reach exciting destinations. It's not just about the journey, it's also about the potential rewards waiting at the end of the line. As an investor, you could enjoy the ride while looking forward to the prospect of attractive returns. That's the beauty of investing in a company like CLAS, which combines solid performance with a forward-looking strategy. It's a compelling proposition that makes CLAS a potentially lucrative investment opportunity. So, if you're an investor looking for high returns and a promising future, CLAS could be worth considering. It's important to remember that no investment is without risk. This includes investing in CLAS. This year, CLAS share price has experienced a 6% dip. It's like a ship sailing through a storm, facing waves that cause it to bob up and down. Furthermore, it's currently trading at a price that's 10% below its preferential offering price. It's as if the price tag on a coveted item has been marked down. However, this situation could be seen from another perspective. For some, this could be an opportunity to purchase shares at a lower price, akin to finding a hidden gem in a sale. It's like walking into a store and finding that the item you've been eyeing for a while is now available at a discounted price. For investors who believe in the long-term potential of CLAS, this could be a chance to increase their holdings while the share price is lower. But remember, it's crucial to approach this with a balanced perspective. The dip in price could be due to various factors, and it's important to understand these before making an investment decision. It's like doing your homework before a big test. The more prepared you are, the better you can navigate through the complexities of the investment world. So, while CLAS' current situation might seem like a golden opportunity to some, it's essential to do your own research, understand the risks involved, and make an informed decision. The bottom line? If you're looking for a well-diversified REIT with a strong sponsor and exposure to the travel industry's comeback, CapitaLand Ascott Trust might just be your golden ticket. As always, do your own research and invest wisely. All right, my fellow investors, that's the scoop on CapitaLand Ascott Trust's sweet 16% dividend hike. As we've seen, CLAS has been making all the right moves, from expanding its global presence to sprucing up its properties. With a solid track record and a bright future ahead, this hospitality trust might just be the secret ingredient your portfolio needs. But hey, don't just take my word for it. Dive in, do your own research, and see if CLAS aligns with your investment goals. If you found this video helpful, show some love by smashing that like button and subscribing to the Investing Iguana channel. Stay tuned for more bite-sized investing insights that'll help you navigate the wild world of finance. Until next time, this is Iggy, your trusty Investing Iguana, signing off.